5 years ago, the unthinkable happened. Lehman Brothers collapsed. The world economy is still recovering from the global financial crisis that ensued. Are banks any safer now?
Capital cushions and the buffers that have been imposed by various regulatory authorities should provide some degree of comfort.
Capital ratios have increased, the leverage ratios have gone down, and probably a lot of, particularly over here in Europe, a lot of the bad assets have in part been written off.
There are areas of weakness, and particularly weaker banks in Europe need some surgery.
Post-Lehman, lenders are subject to tighter regulation and have to hold more capital. But not everyone believes that's enough. Eurozone politicians are building their banking union. Last week, they gave the European Central Bank powers to supervise up to 6,000 banks. The goal is to be able to wind down failed lenders and protect savers' deposits.
This, in our view, is the biggest integration step in Europe since the introduction of the common currency.
But disagreements mean it's been a long time coming. Some aren't convinced that a one-size-fits-all approach is the answer.
What works for the French banking system might not work so well for the German banking system or the Italian banking system or the Spanish banking system. And we have seen different speeds of paying attention to the banking systems in different countries. So, for example, in Spain there has been an enormous amount of consolidation. 43 local savings banks have been reduced to, the low teens. Whereas in Germany nothing has changed. They still have thousands of banks.
Switzerland's looking at other ways to strengthen its banks. Politicians are renewing their efforts to split up UBS and Credit Suisse. They want to separate the riskier investment banking activities amid concerns that they are still far too big to fail.
They far outweigh the size of the Swiss economy, and they're taking the right steps to make sure that if one of those banks gets into difficulty, Switzerland doesn't get into difficulty. And it's really that discussion about the link between sovereigns and their banking system, and the Swiss are taking it very seriously.
Banks are now better prepared to weather the storms, but few doubt there won't be another crisis at some point.